Welcome to the Ohms Property Podcast, your go-to guide for navigating the world of property investing. I'm your host, and in every episode, I sit down with property investors, developers, and top industry experts to share their insights, strategies, and inspiring stories. Whether you're a seasoned investor or just getting started, join us as we explore all aspects of building wealth through property. Welcome to another episode of the Ohms Property Podcast. Today, I'm joined with Nathan King, and I'm going to tell you a little bit about him before we get started. So Nathan has handled over 100 million of commercial property deals, from pubs to places of worship to industrial estates. And I would say few people has handled as many opportunities as he has. And so hopefully today he's going to talk to us about some of the pitfalls of commercial property investing. So Nathan, over to you. How are you doing today?
Yeah, good. That's a amazing intro. I haven't had that sort of intro before.
Yeah, good. I've got the iPad here, so you can't give the credit to me. It's all written down.
It's all written down. Love it. No, yeah. All good. Thanks for having me on the podcast.
Thank you for coming in. So I've known you for quite a while and seen you quite active in some of the property WhatsApp groups that I'm in, and you're sort of go-to guy for various bits and pieces that people need advice on. So I thought it'd be good to get you in and get a unique perspective.
Of course.
So would you mind, for the purpose of people listening, just giving us a bit of an overview about who you are and what you do?
Yeah, so my name's Nathan King. I am a commercial and development agent. So I've been in property for coming up to 11 years. So I started in 2014. My first ever job was technically in commercial. So I was managing a school after school hours. Then I spent some time in rent to rent. I did that for 3.5 years, well before it was in fashion.
Yeah.
So I started in January 2015.
Oh, wow.
So yeah, that was before anyone knew what it was, etc. I did that for 3.5 years, and then I got a passion for deal sourcing, and then from there, that's where I got into commercial property. So I've been in commercial property for just under 7 years. And yeah, as you explained, I deal with offices, pubs, land with planning, land without planning, all the things that you think are glamorous, but when you go to a derelict pub or when you go to a derelict office that needs converting, it's not as glamorous as it may sound.
Yeah.
But yeah, I've done every type of transaction. I think the only thing I haven't sold is a hotel, but I'm under offer on one.
Oh, right. Okay, amazing.
So there you go.
And so how do you trade? Are you working for someone, or are you self-employed, or how does it work for you?
So technically I'm self-employed. So I operate under a franchise called Huzu, where everyone's self-employed and does their own thing, but you get the backing of Huzu. So similar to like an EXP or Keller Williams or one of American style sort of thing, but for commercial specifically.
Amazing. That's fantastic. And geographically, what areas do you cover?
So my main focus, people call me the South London guy.
Yeah.
I'm from South London, born and bred, from Croydon.
Yeah.
However, I operate all over the London and the South East area, but I've done transactions all over the country. I've sold property in Wales before. I've sold property. I'm under offer on something in Worcester at the moment.
Oh, wow, yeah.
So yeah, it will always be opportunity led.
Yeah.
However, the primary focus is London.
Where you live, yeah.
Yeah, South London.
Excellent.
My patch.
So I think, I've made some notes of some questions, which I think hopefully will give some value to the people listening. And I thought what we could do is maybe just talk a little bit for those, if you're listening to this for the first time or watching, and you want to really know a bit more about commercial property, this could be a good opportunity for us to break down some of the things that people don't know.
I like that.
Yeah, if possible.
Yeah,
so one of the things I first said is, if you're new and maybe you've never seen or invested in a commercial property, to really know what are the key differences between investing in a buy-to-let property or investing in a commercial property, for what would be the key differences, would you say?
There are two different strategies. That's the first thing I would say. I think commercial is more in the limelight now, but I think the fundamentals, I would say, the key difference is there's a lot of talk when you're talking about residential around capital growth. In commercial, there may not be the same level of capital growth. So let's say, for example, I might buy a building that has Tesco's on the ground floor. So I'm buying the Tesco's really. So it's a Tesco's. Tesco's are paying £100,000 a year and I buy it for £2 million. So I've bought it at a 5% yield. But Tesco's don't have any rental increases and they're going to be in there for the next 10 years. So you're getting your money. Mm-hmm. That's the difference between, and also there's no repairs or anything that you need to do to the building because it's going to be fully repairing and insuring lease. So essentially the talk of passive income, I would say commercial's a little bit more passive than residential. Residential, there will be elements of a broken door handle or other things that may happen within the property. But with commercial, it's all their responsibility. So you give them the keys and say, crack on, just pay me on time.
Yeah.
But the capital growth side is not really there. So when I am selling assets that are commercial, the yield may not be the yield may be more attractive than residential. So if it's a HMO, you might be able to get 10% or more. But in commercial, typically you're looking at 7% plus, unless you're getting a Tesco, which is a 5 or 6%.
Yeah.
And so, the main thing is capital growth is more prominent in residential. But I'd say in commercial, you could be underpinned by development potential or potential to extend or adding value in other ways. And so that's the other element to it. So,
sorry to interrupt, but I just wanted to introduce a sponsor of the channel. Trinity Finance is a directly authorised FCA regulated mortgage brokerage. Founded in 2015 with over 30 mortgage brokers, we're really well placed to help you with all your property finance needs. Starting with first-time buyers and those moving home, we also help people remortgaging residential and buy-to-let property. Alongside that, we specialise in ground-up development, commercial lending, HMO funding, mezzanine, auction, and also your traditional buy-to-let. If that's of interest, get in contact with us via email at info@trinityfinance.co.uk, or you can give us a ring on 01322 907 000, and we look forward to hearing from you. I was going to say that Tesco deal at 2 million with 100k. It's just, you're not reeling me in on that. I mean, mainly because a lot of investment strategy is value add, is opportunity based, it's regearing, and parking your money at 5% may be really suited to SIP or SAS investor or something like that. Yes. So there is always a need for these. But would you say, so now if we look at that Tesco property, if the uppers were Class E and you were able to, that was currently used by Tesco's, and you were able to take that office space off Tesco and give them a new lease for 10 years at slightly reduced rent, say 90k rent instead of 100, but now you've got 5,000 square foot of Class E that you've taken back into the demise of the freeholder, and now we can use permitted development rights or planning to convert that space into residential. Now you might draw me into this type of deal.
See, this is how I know you've done this before, because I've got an example of a really good example. So I sold a property in Maidstone in 2021. Yeah. It had a prominent, I think on the balance sheet, the actual tenant is what I think they turn over like £100 million a year, right? Yeah. So massive company. So they're what we class as a strong covenant. So not equivalent to a Tesco, but on the same sort of level as a tool station or someone like that. Yeah. So they're in the building, they're occupying the whole building. The whole building is ground floor commercial with 2 flats above. They ended up, the owner, the new owner purchased it, changed the lease where the tenant only could occupy the ground floor. They took over the upper floors, rented it out, got more income, and then to the rear, they got planning for a HMO, a large HMO, so a new build HMO. I think it's 15 ensuite rooms they're going to put in there. So that's what people do with commercial, where they might buy and have that value add angle.
So where you lose the capital appreciation that you get in residential and buy-to-let property, the opportunity in commercial is regearing of leases at better yields and value add opportunities via planning or converting elements to residential, essentially.
Exactly. However, there's more risk because he didn't know prior to buying the property whether the tenant will be happy to regear the lease. He didn't know prior that he will get planning permission to the rear. It's all a gamble. And he's been able to maximize the value as much as possible, where he's repeatedly saying to me, what a great deal. That was 4 years ago now, but he's still telling me it's a great deal, but he made it a good deal.
Yeah,
and that's the difference. I would say commercial's more for the sophisticated investor if you want to do value add. If not, and you just want stability, then we go back to the people that want to buy a 3-day pension because there's tax benefits.
Yeah, totally. Profit is in the eye of the beholder, as they say. Some of the best opportunities that I think I've actually purchased have been things that have been obscure that other people have missed.
Yes.
And you look at them and other people would think, oh, there's nothing there. But if you actually, it's like finding a needle in a haystack. That's a lot of the time. If you can find the opportunity that someone else has missed and get rid of the competition, it can really hopefully be profitable. Right, that's another question. So I don't know where I've got this from, but I'm told you've done 100 deals, 100 plus deals.
Yes,
yeah,
correct.
So out of that period of time of trading, of being in this business, valuing, selling commercial property, land, development, all the things that you're doing, what has been the hardest lesson for you to date? So where's the biggest learning curve for the people listening? So you could tell us about a mistake you've made, or a real hard lesson that you would never do it again now, perhaps, or something that share something with us.
When you say as an agent or watching a developer purchase, or
either's totally fine. So you can use a developer's mistake, or you could talk about perhaps yourself as something you didn't see as an agent, and then maybe the listing went on to someone else, or I don't know. Give us your views, really.
I think the biggest lesson that I've learned being an agent is to not waste time on certain properties. So I've found that if I dedicate enough time to any property, I'm selling it. Fact. But I've been on deals for 5 years before. So it's the time and cost investment's just not there. I think for listeners, if you're wanting to be an agent, I think the key thing is about understanding your deals, understanding the market and how things work. So for example, if you don't know how to run a development appraisal, then how are you going to sell a development site? If you don't really understand the different angles of a particular property. So for example, you might be selling a development site, but there's an existing building there. Before you know it, you've got a church wanting to buy it, or you've got a mosque that wants to buy it, or you've got a nursery that wants to buy it. So being able to access those different pools of people is essential. And I think a lot of people that want to be agents, they realize that most people that do my job are chartered surveyors. And they've gone through 3 years of a degree and then 2 years doing an APC. And then they're like postgraduates, and then they start actually working on proper stuff. So that's 5 years before even really getting your teeth into things. And so you have to be in it in the long run, and your knowledge is everything. And so So
Nathan, what you're telling me is 5 years worth of a degree and all of that money that goes into it, because we know how much this stuff costs, and compare that to hands-on experience, seeing, learning, doing the transactions. Which one's better? Which one would you change it? Would you go back and do anything different? Like where you are now, the knowledge you've got now as a commercial agent.
I wouldn't be able to do it the traditional way, unfortunately. No. The traditional way is you do your degree. So I went to university. So if I had a RICS accredited degree, that would have been helpful. But let's push that aside, the APC side of things, and going through that graduate process. If I started, I think I was 23 or 24. I've been outside of university for three years now. If I had to start at a graduate scheme, that would have been good, foundational, but I definitely would have made the same amount of money.
No, and the knowledge,
because I was punching above my weight. like massively.
Yeah.
Like I'll be 2 years in working on a massive site. It may go through, it may not, but you're involved, you learn.
Yeah.
I remember working on a site and I was definitely punching well above my weight. This was pre-COVID. So
are you saying that because it was a large value site that perhaps you don't feel like they should have come to you? Or what was the reason you say you're punching?
I'm punching because I'm a year into it. Obviously I had support. So there was people around me that I can lean on and things like that. So that's another key thing.
Yeah.
But like I ran an appraisal. I knew how to run an appraisal. But in terms of the amount of people that I knew that could potentially purchase the site, I wasn't really there. I was on a joint agency with Savills and the director's 25 years into the game. So, but with that particular site, no one wanted it more than me and they knew that. So it was pending planning permission. When the committee meeting was happening, the owners didn't turn up. No one turned up apart from me. I'm just sitting there and I know that it's got planning before everyone else.
That's dedication.
Like really committed. When the Section 106 was being agreed, I sat down and read through the whole thing. Wow. Didn't know what a Section 106 was. So yeah, I think hands-on experience is important, but everyone's path is different.
Totally. That's really interesting actually. So I touch paths with commercial valuers valuing property from the kind of background business that I've got, but also from some disposals of transactions as well. And the way that they approach an appraisal sometimes is, I would say, cautious in that they're looking at this from what will this thing value for, but it doesn't always, in my opinion, attribute the true value to what something could be worth. You know, does that make sense?
Of course.
And when you approach a commercial estate agent, they will look at things holistically and say, what have you got? What's it worth? What could you do to make it more? You know, what's going to sell this for more money? And those things are really valuable, actually.
That's very important.
Yeah. So you're listening to this episode now and you've been investing in some buy-to-let, or perhaps you're new and you've got some money, or you haven't got some money and you're looking to start your journey in commercial property or development, one of the two, but you're not focusing on buy-to-let property. Let's just say that's you and you're listening. What would you say are the biggest opportunities for those people right now? What should they focus on?
Look, I see every type of opportunity, and I think the key at the moment, you can't put your finger on it. I think the key at the moment, I'm finding the people that are doing well have a strategy of some form. So for example, they're seeing an angle that is not traditional. So there's new things that are coming out. So at the moment, the buzzword is supported living. They will, for example, I had a children's home, struggling to sell it. It also is a nursery, but it also has development potential. The person that ended up buying it was an investor that wants to put a charity in there that operates a children's home. They were able to trump everyone. And they bought it quickly, and it's because they have a strategy. We buy, we put our tenant in there, we get a nice yield. We're doing something good. Everyone's happy. So I think the key is to have a strategy and understand your strategy better than anyone else. Well, try to understand it better than anyone else. So I wouldn't say, and that will be circumstantial. So you might be partnering with a nursery, so you buy it and you put a nursery in there, or you might partner with a restaurant, you buy it, you put restaurants in there.
That's really interesting, actually. So essentially, I mean, I think that's really valuable advice. It's saying don't scattergun and look at all of these different, because commercial property is a wide variety of things.
Correct.
And investing in that sector can be narrowed down and niched into a much smaller sector where if you become an expert, you can really do well.
Yes.
I had a client who was doing HMOs and gradually started to operate a care-based business, and those two things had a lot of synergy and started to make a lot more money when he was the operator of the care business and then operating through his HMOs. So those two things make a lot of sense. So are you essentially saying if you want to get into commercial property, laser focus, get educated in that particular thing that you want to do, or shadow someone that's doing what you want to do, and then do it. Don't just go and buy something because you think it looks good, essentially.
Correct. I would definitely advise that. And look, it's not my job to necessarily advise everyone on how they should be spending their money, but I've seen a lot of people buy a lot of property, and the ones that do well know their strategy, and then they home in on that strategy, and you might pivot. So it's okay to pivot, it's okay to change your mind, but when you're purchasing, you know what you're looking for. And the problem that people have is they don't know what they're looking for, and then how are you going to find something that you don't know what you're looking for?
Yeah, that's really true. So are there any particular trends that you're seeing? So, at one point there's this big movement for people trying to do, I don't know, data centers. Everyone's trying to buy industrial, and now we've got all this AI stuff, and they need all these computers for these data centers, and everyone was trying to do that, and then that's gone through the roof, and then then all of a sudden people are saying, oh, I've been on a commercial to residential education course, and now I'm trying to buy a commercial with uppers, and I'm using this strategy that I've learned, and I'm doing that. Is there a trend right now that's new that someone could look into, or would you say do a bit of research and do a bit of everything? What are your views?
I wouldn't say there's a particular trend right this second. I think the key, when I'm selling any commercial property, what I'm finding is it goes to someone with a strategy. So operators actually trumping everyone. So for example, I was trying to sell a hotel. The only people that inquired were schools. So SEN schools, that's a big thing. So SEN schools, so special educational needs. Those are big at the moment because there's a lot of government funding for them. There's buildings out there that can be converted into them quite nicely. So the one that I'm selling has around 18 acres of land around it, etc. So it was perfect for the needs. So yeah, I would say operators are doing well, and that's we've come from a pandemic. So post COVID, there's been so many changes, and the market's still, I would say, adapting every couple of years. So first of all, it was 2022. I remember everything was flying in terms of consented sites. We still had help to buy. So people want to sell, buy before help to buy comes in, and do what they want to do before help to buy goes away. And then we had the list trust situation, then things moved on. But at the moment, I'm finding that owner occupiers are doing well. And that's why I was saying a lot of people are buying and putting a tenant in who's able to pay really strong rents. So yeah, I would say.
So it seems to be a bit of a theme that you feel like the commercial property being linked to a business of some sort that you are the operator in. So it's that sort of opco-propco scenario where the two have the synergy that you get double whammy, or you know, more for your buck, if you like. It's really interesting. And then, so we've spoken a little bit about developments, and that could be land with or without planning, commercial to resi conversions. So something that people want to add value on. Would you say someone, and I'm always conscious of people listening to this that are new, and I appreciate there may be some really sophisticated investors that listen to this channel, but if someone wants to assess the viability of a development site, whatever that may be, it's a lonely game doing that at home in an Excel spreadsheet on your own. What advice would you give for someone who's trying to assess a development site on their own, whether they've got the knowledge or not? Is there anything they could do? Because we don't have a chartered commercial and residential surveyor in our pocket we can lean on. But so do you offer any services that they can come to you and you could appraise something for them? Or if not, what can they do to appraise sites better?
With appraisals, it's always going to be dependent on the person. So, and that's, to answer your question, is everything's about your power team. Who's in your team? So you might look at a site and it's got planning permission, and your build cost is 2 million, and then someone else's build cost is 2.5 million. You've just got a better builder. Another person might have like finance, but it's cheaper than everyone else because they're not going to a high street bank. They've got this investor who's got loads of money, and it's their mum's best friend. Like you do, everyone's circumstances are different. I think the key thing is creating a power team that you can lean on, and that should include an agent as well. Where an agent can have a look and go, yeah, don't think you should buy that, or, oh, I've heard about this, because there'll be different elements to a consented site that play a huge factor to the whole acquisition process. So
Like what? Give us an example.
So for example, my job would be, send me the site. I look at it, whether it's through an agent or not. I'll know the agent most likely, so then I can pick up the phone and actually find out exactly what's going on. Because, and without compromising yourself, because I won't mention you as my client, I'll just say I've got a client. What's going on? Then usually they're quite friendly with agent to agent, so they tell me exactly what's going on in terms of who the owner is and why they're selling. Is there any bogeys there that we don't know about, and skeletons in the closet? So agents can do that for you. And then someone that can run your numbers. If you need to sense check, you should have a QS in your team, a quantity surveyor who's able to run numbers for you if you're really serious about the site and want to take it further. Your builder should be able to provide you a quote. Maybe you have an arrangement with them where you've sat down with them and want to do JVs, and you've got one or two builders that you can lean on and say, oh, look, do you want to come with me to the site and have a look at this? So a solicitor that maybe you can pick up the phone for and just say, oh, look, by the way, I've got this thing, it might be coming. Do you want to have a quick look? And some might do that for free if you're working quite closely with them, or you've got them on a retainer. So your power team's everything, and that's why your network will be everything, especially in development, because that's where you trip up. And I've found, being an agent, my network's quite strong now, where I can get advice very quickly, and it can cost very, very little.
Can I ask you, do you invest in property yourself?
Do I invest in property? I've had businesses where I'm investing, however, and it's investing in property. I don't know if people class rent to rent as investing in property.
Yeah, they do, don't they?
Yeah, but the plan is to invest next year.
Okay. I always ask that because I've got this strange thing that I notice in my industry. So I think, I run a mortgage business.
Of course.
And I find that the majority of people in my industry who are around property every day don't actually, other than their residential home, they don't actually pursue any investments in property. And it's always been quite strange to me because obviously I'm the complete opposite to that.
Yeah, of course.
My whole focus is around building investments through property or asset-backed investments. And so it's always been a bit of a strange concept where I think, well, you're a mortgage broker or a commercial agent and you're advising people on buy-to-let or residential or commercial investments, and you've got all this knowledge around you, this technical knowledge, but you haven't got a portfolio.
Yeah, that's
I'm thinking, what's am I doing something wrong? Are you doing something wrong? What's going on? So I ask you that, Nathan, not to put you on the spot and say, why aren't you buying commercial property? But if I had an advantage, what I mean by that is that you have a technical ability to see through things other people would take a long time to see through, and you can find opportunities. I ask, is that something you plan to use to build wealth for yourself?
It's funny that you say that. I think probably a couple of weeks ago or a month ago, I was doing a deal and I was speaking to the developer, and they've built quite a strong portfolio and they've done quite a few schemes. And then when we were talking about the site and the nuances of acquisitions, I will know more than anyone because I'm an agent. So agents usually, because we do it more than a developer. A developer will do it once or twice a year. We're doing it 10, 20, 30 times a year. So it's a different ball game for us. So we know the process in and out as an agent. And so half the time I'm like, you don't know what you're doing. Like this bit, you really don't have a diddly squat. Yeah. And so recently I've gone, I should just buy it myself. I obviously know a little bit more, and I've got the power team, the people that I'm talking about, I can lean on. I've got all of that.
So what's stopping you from doing that?
I just bought a house for myself. That was my priority. Family comes first with me.
Of course, yeah, absolutely. Congratulations for doing that. That's an achievement in itself, isn't it? To get your first property. So yeah, well done.
It's our second. So we were moving. So we sold our flat and we wanted to move to a house. So family's expanding and things like that. Me and my wife just wanted to settle down. So amazing. I think my game plan was always to get the house, settle, and then start investing. So next year, I definitely will be looking a bit more. But
you're going to find the needle in the haystack next year, is what we're saying.
Potentially.
Amazing. That's really interesting. I'll invite you back in 2 years and we'll chat to you about that again and see how you get on. Right, a couple more questions for you then, if I may. There was this prolonged period where like the buzzword was commercial to resi conversions, class E or class MA and all these different technicalities on PD, and everyone's doing it, and certain individuals selling these courses left, right and centre, all about this stuff. Some of it, probably really valuable, and if you got in on this stuff very early on, you may have made a significant amount of money. I feel like that trend is slowly slowing down, if you like, and we still have a massive shortage of housing. Yeah, would you agree?
That's what they say.
They say it, don't they? I mean, if you see it on the ground, I don't know, but there's seems to be it seems to be in the press constantly that we're not meeting our housing targets and we're not building enough. And we had these towns like Milton Keynes that were created, and we don't do that anymore. And there's no infrastructure, and we just seem to fail hitting our housing targets. So commercial to residential conversion was like a solution that people were selling as, you can flood the market with all these and we'll meet our housing targets. And I don't feel like it has been what it was meant to be, and it doesn't seem to be that way. So the question for you is, do you think commercial to residential conversions are a solution, or do you think they're just kind of ruining high streets where businesses operate?
It only can happen on secondary parades, so it wouldn't necessarily be ruining a main high street necessarily. It doesn't necessarily work like that. You won't necessarily get the planning permission. Class MA, there are rules and regulations around that. I would say, being on the ground, the commercial to resi, when Class MA came in, it wasn't that exciting for me. I'll be brutally honest. It was exciting for every person that was new to the market. But for me, I'm like, we've been doing that. People have been doing that. And so it's not anything new. It's just, people flooded the market with courses and things like that, and then gave a lot of people confidence. But also, most people, because I'm operating in London, so outside of London I can't speak for, but mainly in London, people are not silly. Like, they'll know they can get, they'll know their numbers, they'll know they have an office that can be converted into flats. So they inflate the price accordingly. And so the deals weren't that exciting. I can name a few that I've sold. I sold one in Camberley. The owners did well out of that. But initially, we were advertising for probably 200k more. But
so that development potential was baked into the initial cost anyway?
Yeah, to an extent. But we'll as an office, it had its value as well. I sold something in Red Hill, which was a nice office. That one was a really beautiful office. Land around it, plenty to work with. The guy went and got planning permission and converted it into flats, and it looks beautiful. That had a lot of interest. Loads of people were disappointed with that, and in terms of like other buyers, the prices kept going up. So I think, that's not the solution. I think the main reason why development has slowed down is because build costs went up, finance has gone up, and people who bought pre-COVID or in 21 or 2022, GDVs have gone down. That's another thing. When they're going to sell, they still want the price, yesterday's price, but there's a new price. And they haven't accounted for the build costs going down. They haven't accounted for the finance. They haven't accounted for GDVs going down. So everything, build costs going up, sorry. So all of these factors into a nice pot of mess is causing the real issue. And I've heard like the government might introduce another Help to Buy or something like that. I'm not too sure. I'm not saying, I'm not making an announcement, but if something like that came in, that will just prop up the market. It's not a solution. There needs to be landowners realistically have to just reduce their prices, and then that's the way forward. And then there needs to be incentives for people to build, because at the moment I'm speaking to loads of builders who don't want to be builders anymore.
Yeah, totally. I see that all the time. And the other thing that's really interesting is that there's a north-south divide as well. And what's so strange is, I've just come out of a small-scale property development. I'm just strangely, not sure why, entering into another one quite quickly after, but I guess that's what you do. We can make it work in the south if you buy at the right price, if you add planning value and you deliver the scheme and you're conscious of project management and build costs. You can come out of it, hopefully, without losing the shirt on your back.
That's it.
But what I find very difficult to see how people do this, and I appreciate build costs are lower the further you go north in the country. There are some locations where, you couldn't give the land or the asset to someone for free with the planning permission that's already consented for them to build that, for it to be worth at the end, to make any profit or break even. It's just a loss. And I don't know if it's just housing associations or non-profit organisations that buy those types of things, but
not anymore.
So you look up sort of past the M25 and upwards, and you sort of wonder how development takes place in those locations. And I appreciate you've got big developers, you have standard house types, and they've got ability to really keep their costs down, and they may have promoted land and strategically got value added at the beginning. But it does make you question, how does that work when house prices in those areas are what I would consider a build cost is the same as their house price, if that makes sense, the cost of building something.
For sure. I think one of the factors, look, I haven't sold loads of development sites up north, but what I would say is one of the factors is everything will be relative there. So
the spec and the build, quality of the build, and
and also the profit levels and how much people are trying to make, because to survive in London, the cost of living crisis is very, very real. And then it still applies up north, and therefore like a cup of tea here is like £4, but up north, I assume it should be a lot less.
They'd fall off their chair, wouldn't they?
So it's going to be relative. So the builders here might be on £100 to £150 a day, but over there it might be £80.
150.
I don't know.
That's 10 years ago.
It's less.
Don't
more.
Say that, because if any of my contractors are listening, no,
I don't know.
I'm only messing.
Yeah, but it'll be relative. So
totally.
If it's £150 here, over there it might be £80 or
correct.
something.
You're right. The cost of construction. Really interesting, Nathan. I wanted to ask. So if someone's thinking to dispose of an asset, because obviously we hope to build property portfolios. We hope to hold assets for passive or active income, and a lot of people have got into property as they've been sold a dream to escape their day job and all those things that you hear about. But some people get to a point in their life where they've just had enough, and they want to sell off some assets and maybe enjoy some of the money that they've built up over that time, or they've actually strategically bought something with a view to sell it for a profit. There's lots of people that do that. How does it work if they come to you for evaluation? How like could you give us a rough idea what it would cost them to sell, and also the marketing strategy? So are you via the open portals? Do you auction sell things? Like, just give us a bit of an example if you can.
Of course, yeah. So it will always be on a case by case basis. So if someone has a development site, let me give you an actual example. So I've just exchanged on a development site in Bromley. It had a ground floor commercial. It had planning permission for a ground floor commercial and 8 flats above. Currently, it's an office. They came to us saying, we've been trying off market for a while, which is very common in commercial. That's why I'm saying it's case by case. And we want to put it on the market and try and get as much value as possible. So I said, that's fine. My usual strategy is I was
just going to say, Nathan, why didn't you call me on that transaction? Carry on. I've interrupted your flow.
Carry on. Sorry about that, next time. But the strategy would be, I'll do an off-market campaign. The off-market campaign will be for whilst I'm drafting a nice brochure, getting images done, etc., what I'll be doing is communicating with people who I know are local or have expressed an interest in similar sites before, and just sending them an email about the particular site and then making phone calls. So that'll be what we do during the brochure making process. Then the brochure will go on all the portals. So Rightmove, Zoopla, On the Market, but Nova Locar, Prime Location. So pretty much everything. And then when it's on the portals, we start getting more inquiries. You'll find if it's been off market, some people might say, I've already seen it. In that process, I engaged a local estate agent. I'm not an estate agent, so I'll engage a local estate agent and say, can you provide a GDV so I can add it to the brochure? In that, they get a little bit of publicity, so people come to them so that they're able to get the resales, and then I'm able to get something accurate when people ask me about a GDV. And then we continue to engage the market. I think with that particular site, we took it on knowing it's a little bit expensive to an extent, but it's still a good deal for someone. And we ended up selling it to someone who has a construction company. And so that's one example of the process, but every process is different. I've had a process where I've got unconsented land in Dulwich that we sold last year. And that one, we went to draft the brochure. We did a 2-week off-market campaign. It's a prime location, Dulwich, potential for a housing scheme of around 8 houses.
Wow.
Very unique. We did an off-market campaign, engaged the market, and we ended up getting the price that the owners wanted before going on the market. So we proceeded, and we knew if we go to the market, we might lose this buyer, and we know he's the buyer. He lives around the corner. He only buys in that location. Who else is buying it? And he was able to be competitive on pricing.
And in terms of the charging structure, does the buyer pay fees to you, or do you charge the seller fees, or is it a combination of the two? Because all sort of estate agency models / selling models work differently, don't they? So
so in commercial, you can be acquiring for a client. So let's say, Omar, you come to me and say, oh, look, I'm looking for a large HMO in South London. If you find anything, let me know. And I find something, and then you pay me a fee. And that can be, usually it's 2% plus VAT is the standard in the industry. So that's what we will charge. And then disposals. Disposals are when you put on the market, or you're acting on behalf of the seller. So I do a bit of both. I'll probably say 50-50 is what I do.
Amazing.
In terms of acquisitions and disposals.
Very good. Excellent. So, question for you.
Talk to me.
What's the biggest piece of advice you could give someone to do right now if they've watched this and they want to learn about commercial property or developments? So, and I like to caveat that with anything that's really expensive, it's going to cost them 10, 20K for this mastermind or something they've seen. Let's just push those to the side for the minute, because we can't categorically say whether they are value for money. So is there anything that they could do? It could be a book that they could read. It could be a podcast. It could be a consultation with someone. What could they do that you would say would just give them a bit of advice initially, something that's cheap or free for a newish investor, if you could?
Here's some free advice.
Okay. Yes, please.
It depends on the level of interest, So if your interest is, I want to do this, I want to be a property developer, I would say go and find a job, working for a developer. That is the best way you'll learn. I would say try and get a job somewhere where you could just sit under someone's feet and just learn. In terms of podcasts, follow this one.
Oh, no, you shouldn't have.
It's an obvious one. And then there's some others out there, the Property Developers Book Club.
Yes.
I think Alex Martin's got one now, which is quite good. People in Property is quite good. Networking events, attending those, that might be free, might not. And then also one thing that you'll be surprised about is just approaching people that you follow on LinkedIn or Instagram. I would say LinkedIn more so. and try and follow as many people as possible, but not necessarily the ones that are popular in the limelight. I would say just people who are active within the industry. Reason being is because you can get value from them and also offer to help them in some way if you can.
Yeah.
But I would say just approaching people and say, look, can we have a 15-minute conversation? I'd love to buy you dinner. I'd love to buy you lunch where we can just talk about things. And people are more receptive to that than you think.
Yeah, do you know, more recently I've had a couple of people do that to me actually. And I must say my arm could be bent for a nice slap up meal somewhere. And I have met a few sort of younger individuals who are like really ambitious. And it's really nice to actually talk to them and give them some advice on just some basic things really. But definitely, yes, I think that's really valuable. So
yeah, anyone that I've had who's demonstrated like proper energy to do what I'm doing or to be involved, or I'd say, look, happy to have a 15-minute call. After the 15-minute call, if they're still keen, I've had people shadow me for the day. I've had people come with me to sites, or I'll take them out for dinner or lunch. Like, I'm happy to do that within reason. But you'll be surprised, loads of other people are happy to do that. And I've done that to other people. On the flip side, I've approached CEOs of housing associations and said, can you help with my charity, please? And they've done it. And they've given more than just advice.
Likewise, I was trying to get better at being a property developer. And obviously, there's only so much you can teach yourself, I would say. And I had a client of mine who's doing some big stuff, 250 houses a year roughly. And not really down to earth, lovely guy. Like literally, I've helped him with some finance. So I had a relationship with him. But he, you think someone who is of significant high net worth wouldn't give you their time. But if you can ask in the right way and you can perhaps offer something back and support and try to do something for them, you find that they will. Definitely. And so I've been to this individual's workplace. I've shown him schemes I'm working on. He's shown me things he's working on. And that was probably, one of the most valuable things that has helped me in property developments, purely because he has a business which is operating at another scale compared to mine. This chap's got his own land buyer, his own planning expert, his own interior, it's a big business. And when you're trying to grow something, you can look at that and go, not necessarily do I want to grow a business of that size, but it just strategically helps you to think, actually, you
can visualize
and the knowledge was invaluable actually. So,
and I would say that's what people should be looking at. But the key thing to what you're actually saying is you are in the game. So when you're not in the game, the value that you can add is maybe slightly different.
You can make tea.
Or
coffee.
Volunteer.
Totally. If I could, you've got to start somewhere, haven't you? So you've got to do something.
100%. And you can add value at this stage. So anyone that's in the industry, know what value you can add, and then just start talking to people, and then they will naturally think, okay, he can add value in some shape or form. But if you're not in the industry, then look for a job if you want to be in it, or approach people and just say, look, I'll volunteer, or I'll just walk around and follow you. People have just followed me, sitting in my car, listening to conversations, and they're like, wow. And I'm like,
really, that's fantastic.
Yeah, just being in the car. And I was like, you forget that what you're doing is different. And so for them, just listening to the conversations, the negotiations and all these things, it's like, wow.
That's actually really inspiring, to be honest with you. And I'm glad you've shared that. And hopefully people will, if they're of a younger age and they're trying to find their way into property, I think that will give them a good steer on what they can do. I know a couple of people that have, got videographers following them around. And again, they just do it for free, but they get to see what this person's doing constantly. And that's quite valuable as well. Amazing. Excellent. It's been fantastic getting to speak to you. I'd love to, in the show notes, put your email address, your link to your bio page on your website, and how people can reach out to you. I'm sure there'll be a lot of people that would want to just touch base with you on things that they're working on. Brilliant. Is that okay if I share your details? Course. Yeah. Excellent. And then I always say to people, I'd love to get you back on in a year and just catch up with you. Plus I'll be able to find out if he's gone and bought himself that unicorn deal.
That unicorn.
Yeah, we'll see if he's done it or not. But thank you so much for coming in.
Thank you.
Really hope you enjoyed, and we'll catch you at the next episode.